Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market as usual in the second video. Today's update mostly makes sense for intraday charts because on the daily we have approximately the same story that we discussed yesterday. Our suggestion on possible upward action has not been destroyed yet. So this stuff that we discussed based on this reverse hand and shoulders pattern, or as I many times talked about it, some traders call it as the cup and the handle. Well, it still stands in place, as well as the bullish grabber here. And today we discussed the invalidation point and where you could place the stop order if you would like to use this context for trading. What the level that we have to keep an eye on that could clearly tell us that something is wrong and that market maybe will not show the upward action, because all preliminary steps already is done. So head and shoulders, deep retracement that we have suggested is done. Even grabber has been formed. Yesterday we said that you could keep an eye on minor retracements inside of this grabber's candle for taking the position, and as 30% retracement is done, as the 618 retracement is done, so probably now those who would like to take the position currently already have it. And currently the only problem or the question is that when the upward action will start, in what the sign, if it will not start at all. On the 4-hour time frame chart, you could see the significant bearish pressure around this area. So you can see market can't break these areas very near standing tops of these candles. It means that a lot of sellers keeps the price around 1730 level. You can see multiple grabbers have been formed here, and they suggest that market could drop a bit lower. So here's definitely we see the pressure of the bears, because two equal top levels in a very tight range. It just means that either some big sellers or just community of the big sellers just hold the price around 1730. This level is used for taking the short positions. Well, it doesn't mean that the bullish background will fail, but it means that market could spend some time inside of this range, inside of the range of the bullish grabber that we have on the daily. So it could fluctuate around it, and maybe upward action could start a bit later. That provides two things. First of all, those of you who still consider possible taking a long position, you could focus on the possible retracement again, or you could consider taking the position. Others could keep an eye on the level to control the invalidation point of this overall construction, and in general get information on surviving of this trading plan. By letter, our invalidation point stands somewhere below 17 even, because that's the bottom of the right arm, and the head and shoulders will fail if market definitely will start dropping below the right arm, tending to the bottom of the head. That will be a clear sign that head and shoulders will not be formed. The market's ready to breakout of these lows. But at the same time, inside of this range, we also have some levels that could be very useful to us with the understanding that something goes wrong. So, for example, on hourly chart, recall that here we have the multiple grabbers. They suggest the taking out of these lows. That's important. On the hourly chart, take a look what we have. Yes, it was here's retracement 30%, mostly the 618, almost 618 pullback. Now we have the multiple grabbers that suggest taking out of these lows, right? So it means that we could get a kind of the ABCD pattern that creates an agreement with the 1715 level. That level, the last level that is acceptable and that is stands in a row with the overall context. Dropping below this level, it will be already a warning sign that something is not really good, because market will stand near the erasing of the bullish grabber on the daily, and the breaking of this level, it will not mean that overall head and shoulders has failed, but that will be also the warning sign for overall shape of the hand shortest pattern. So until market stands above the 1715, bullish setup stands valid, and it has no problems with that. But breaking of this level breaking below this level, and especially moving back to the below 1705, it will be bad sign, guys, for the bulls. And in this case, it will be better to not take any new long positions. It means that those of you who consider taking the long position, you could focus on the 1715 area, and that's also the level that others of you who already have positioned with the stops below the daily grabber also keep watching on this level, and well, be careful and see what will happen around this, because reaching the 1750s also will give us the guarded steeple to buy pattern. And if market indeed stands bullish, it should be enough to support market, right, an agreement support, and push it higher. If this will not happen, it means that something goes wrong with the overall sentiment on the market. So that's some minor add-on to our trading plan and the level that we have to keep an eye on.